can we start with the global risk that we have? Ukraine, Russia are at war, and the world, along with the US and UK, are grappling with that. Jean-Francois, is now a moment where you're seeing any reverberations in terms of advertising spend, any consequence at all across the business?
Not for the time being. We are going to be growing at about plus 40% in Q1, reflecting the fact that the company is getting back to 2019 level pretty quickly. Having said that, we decided to exit Russia back in 2020, so almost 2 years ago. Our exposure to Ukraine is quite small, only 0.1% of revenues. Having said that, there is no doubt that the impact on the economy will be felt across all industries, including the advertising industry. But we are geographically very diversified, with 40+% of our revenues coming outside of Europe. Dubai is a good example. I mean, in Dubai, despite the fact that you're still 40% in terms of eyeballs in the airport, our revenues last year in Q4 were at the same level as 2019, reflecting the less mobility restrictions in Dubai, reflecting the World Expo. So that's the beauty of our geographic diversification.
Yeah. Well, Jean-Francois, you talk about, the risk more generally of a slowdown. I wonder how you're thinking about quantifying the impact of an economic slowdown brought on by the war, given that the range of outcomes is so wide at this point.
We tend to outperform GDP growth in terms of top-line growth. So if there is a GDP contraction, there is no doubt that the advertising business will be hit. Advertising depends very much on consumer demand, and people might be tempted to save money rather than spend money. So it's hard to quantify at this stage. But in the past, pre-COVID, when the economy was growing at about 3%, we were delivering around 4+% growth. Bearing in mind that out-of-home is a growth media, especially because of the digitization, which is growing very strongly. We are about 30% of our revenues now, nearly 30% are digital. London is a good example, where in the UK alone, 70% of our revenues is digital. So we continue to convert the best advertising locations to digital. We launched a programmatic trading platform about 3 years ago, which also is starting to delivering very good revenues in terms of programmatic trading, which is the bulk of online advertising revenue. So the impact will be felt, but at this time, impossible to quantify.
Jean-Francois, you've counseled many leaders of many businesses through many crises. Everything that you've lived through. When you talk to industry leaders at the moment, CEOs, they're going to come to you for counsel. You're going to talk to them about the advertising world, what to do and what not to do. As you talk to your biggest clients now, what is your piece of advice? You say Internet madness is one of my biggest divisions. Will they react differently to Louis Vuitton, to Christian Dior, to Volvo? Talk us through the counsel to segments.
Obviously, during the COVID pandemic, and especially when the lockdowns were introduced all over the world, with more than half of the population in lockdown, the cancellations or clients asking to move their campaigns, postpone their campaigns, because at the beginning it was felt that the world would be back to normal in July or in the summer of 2020, if you remember. It was across all categories that we had cancellations, because we are delivering eyeballs. When most of the eyeballs are stuck at home, obviously our business is severely affected. We were one of the most affected industries with a revenue decline of 40% in 2020. But having said that, our biggest category is luxury, fashion, and personal care. This is now about 15% of our revenues. Driven also by China, mainly by China. Consumer demand in China is very strong. We're back to pre-COVID advertising revenue in Guangzhou and Shanghai because of a very strong domestic air traffic recovery. So internet is on the rise, 60+% advertising spend. So We are talking to all these companies all the time.
So given this uncertain environment, it's been an uncertain one for a while. Back at the start of the pandemic, you had scrapped your 2019 dividend. Yet again, you're proposing not a dividend for 2022. Jean-Francois, what will it take you to get the confidence to go ahead and start to distribute to shareholders again?
The reason why we are not paying any dividends is very simple. The industry is facing a consolidation phase right now. We're number one worldwide, but we expect some companies to be sold, companies which have too much debt, and we want to keep maximum financial flexibility. We raised a bond that was very successful. 90% of our debt is on fixed rate. So we are financially in a very strong position, and most investors who are buying Decaux stock are buying a growth stock. So the story is about growth rather than dividend. Having said that, obviously we will resume the dividends when we feel that there are no longer enough opportunities to grow externally, I mean by acquisition. So that's why we want to keep the firepower in order to be able to further consolidate our industry, which is still very fragmented.
Are you looking at more M&A right now? Are you looking at more opportunities in this moment?
Yes, we do. We do all the time. I remember 2 years ago, we acquired a significant stake in the #1 street furniture advertising company in China called Clear Media. So we divested Russia, but we invested in China. So we are constantly looking at opportunities. Our industry is still fragmented, and we want to consolidate our global position. And that's why we decided not to distribute a dividend in 2022 for 2021.
You sound like a man that's ready to get your next deal done in size. Where do you believe the next evolution of growth is for you? Where do you want to buy? Is it China? Is it Latin America? Is it core Europe? Where does your sense of future lie?
I mean, core Europe is certainly an area we're looking at. South America as well, because in both regions there is still local players, which would enhance our footprint tremendously. And at the same time, we are also very much focused on driving the digitalization, meaning that we're investing a lot in data, we're investing a lot in this trading platform as well. Because, again, 2/3 more than, and now in the UK, it's about 90% of our online advertising spend is being bought programmatically, which is only a fraction of our revenues for the time being. Which is why, I mean, we feel that it's quite important to keep the firepower dry. Having said that, also we are again 66% family owned, so we have a long-term view on the business. We've been in business for more than 57 years, and we want to again consolidate the industry and have critical mass almost in every single region around the world. Having said that, we make some arbitrage, like Russia 2 years ago, which we decided to exit. But there are a lot of opportunities right now, and we want to take advantage of the situation where we have a very strong balance sheet, and we can leverage our balance sheet in order to make some creative acquisitions.